Hello, everyone. Thank you for joining this call. I continue to see people as they trickle in, so we're going to take a few moments, a couple minutes, and let people continue to trickle in and get settled. If you're having trouble hearing, make sure that you do engage Flash on your computer. So I'll leave the directions screen up before we get started, and we'll continue in the next couple minutes. Thanks. One moment. All right, we're going to get started in just a moment. I continue to see attendees trickling in and joining our call. Whoops. I don't think I need to do that. Cancel. Well, here, go ahead and get started here in about 30 seconds. All right, I want to thank everybody for joining today's call and taking some time out of your busy day to learn a little bit about lodging taxes and the lodging tax environment as it relates to the short-term rental industry. Everybody's on this call because you've had some type of interaction with MyLodgeTax or Avalara, and you may have questions about what lodging tax looks like for your rental property, what things you should be aware of, and learning a little more about our service. So today's presentation is going to give you a little 101 on the things that you need to be aware of, a good way to help you organize your thoughts and your research to make sure that you are maintaining your lodging tax compliance for your short-term vacation rental property. My name's Justin Stasio. I will be your presenter today. I've been with Avalara MyLodgeTax for around 4 years. I've spent a couple of years on our operations and compliance team, as well as a couple of years on our sales and business development team. The things that we're going to go over today is we're first going to take a look at the basics. What is a lodging tax? What are some of the common patterns that we see within the industry? Why are these taxes important and what purpose do they serve? We'll dive into the different marketplaces or listing agencies and discuss how these tools help you collect or remit and offer ways to help you manage your lodging tax compliance strategy directly from the listing software that you use. A large part of today's presentation is going to go through the 5 steps to achieving your lodging tax compliance. These are the 5 steps that MyLodgeTax has identified as being essential parts of ensuring you are operating your short-term rental within the guidelines of the law. We'll take a look at the product and give you a little demo, take a look at what our system actually looks like and what we expect from our customers and how that simplifies this process for you. And then we'll leave it out, we'll open it up for questions at the very end. And we'll go through as many of those as we can. So go ahead, as I speak and present, go ahead and submit your questions, and then we'll reference those at the end of the presentation. All right. So first, before we get started, we're going to look at this example. This is an example I love showing that just illustrates how complex the short-term lodging environment can be. This example here is a shot of Myrtle Beach, South Carolina. Perhaps we even have some Myrtle Beach rental property owners in the house today with us. So if you are, this is a very relevant example for you. On the left-hand side, you can see the mapping software screenshot of the city limits of Myrtle Beach. It's a bit hard to see, I'm not sure how big your screen is, but the shaded area are the city limits of the city of Myrtle Beach, outlined by the red borders. Any property within that red border in the city limits of Myrtle Beach, South Carolina, must collect and remit the sub-tax rates detailed on the right side of your screen. In this particular example, we have 8 different sub-tax rates that should be all charged to your guests that make up a total lodging tax rate of 13%. These taxes are remitted to the state, the county, and the city of Myrtle Beach. So all 3 levels of jurisdiction are included in this example. All right. Some common things that we see in patterns is the actual lodging tax rate. The total lodging tax rate that we see, what I like to call the wheelhouse rates, are anything between 10 to 15%. You may notice that these tax rates are a bit higher than your standard sales tax rate, which is a correct assumption. The lodging tax usually is combined of both your state sales tax as well as a local lodging tax. So you can have any level of jurisdiction can impose a tax, and you need to be aware of what levels you're paying, how to pay them, the state, the county, and the city, or any combination of those. Your lodging taxes are generally filed on a monthly or quarterly basis, very different from your income taxes that are due on an annual basis. These are filed on a consistent basis, much like any other business that files sales tax. We'll get into this point a little bit later, but you have to understand to what basis do you charge your taxes. MyLodgeTax has identified that all mandatory fees associated with that guest's reservation are considered taxable charges. Again, we're going to come back to this when understanding how to create your taxable base and report your revenue. Some things that we don't like to hear in our office, but we hear them commonly, is that my short-term rental is not a business. Our house is certainly not a hotel. We don't have very many guests. We may rent seasonally, or we have an accountant or someone to represent us that files all of our taxes in April. We don't owe any taxes because we don't make any profit of our place, or my rental platform collects and remits the lodging taxes for me. Your rental property is 100% most certainly a business. You are advertising your product to the public and accepting consideration, usually money, for the use of that product. The word hotel is just a word, and that word has a definition. Now, as I mentioned, that each state, county, and city can impose a tax on the nature of your business, they also get to define the word hotel. So, for example, in the state of Texas, your rental property does fall under the classification of a hotel. However, in New York, your property does not fall under the classification of a hotel. And that classification does determine what type of taxes you have to collect and where you have to pay those. Regardless of how often you rent your property, if you engage in any type of short-term rentals, you must apply with the necessary jurisdictions for those appropriate tax accounts. Once you have a tax account that's established with your state or local jurisdiction, they're expecting a tax return to be filed every single period, regardless of the income amount collected. So you should be, even if that revenue is zero or you're not renting, you're out of season, you should still be filing those tax returns to satisfy the obligation of your short-term rental. When you are in season, you will be just reporting revenue on those tax returns. When you make a profit, That's all an income tax assumption. Those are income tax implications. Income tax is due every year based on what you actually profit on, and that's what you're going to pay from your net profit. Lodging taxes are not based on what you make. Lodging taxes are charged to the guest. They're collected from the customer and then remitted to the state, the county, the city, wherever. So unlike income taxes, where you don't have to pay if you don't make any money, lodging taxes must be collected and remitted. Nothing should ever be coming out of your pocket. You are just responsible for collecting and paying that tax to the appropriate jurisdiction. We're going to look at the sixth point here, where the rental platform may collect and file lodging taxes for you automatically. This is most common. The only ones we really identified is Airbnb and VRBO. So we're going to look into how those tax remittance programs apply to certain people. The first thing to do if you're going to research this information on your own is understanding the terminology that your location uses. I've been using the term lodging tax, which is just one generic term. However, different states and localities call their taxes something different. In California, we see the term transient occupancy tax. That word occupancy tax is very common among the industry. In Texas, it's a hotel occupancy tax. Remember, we do fall under the classification in Texas. In Florida, a little bit different. We filed general sales tax as well as what's called a tourist development tax. So understanding the terminology and using the correct terminology for your area is important, because that's a way for you to get in touch with your agencies and receive the most accurate information. It's very common that people will contact their state or local agency and the agent doesn't understand what they're asking or what taxes they feel like they're trying to be informed about. So know your terminology, know what to call these taxes. It can get confusing. Once you know what your tax is called, you need to understand when it needs to be applied. The vast majority of the industry in the US is determined by a threshold of less than 30 days. So as you see here, most states define their short-term rental threshold as a period of 30 days or less. Other states, such as the Carolinas, Tennessee, New Jersey's a new one, those guys are all defining their short-term threshold as a period of 90 days. So a few more rentals, longer stays are encompassed in what is considered taxable. Even a handful of states like Florida, Hawaii, and Alabama, though New Hampshire in there too, these guys actually determine their short-term rental threshold as a period of 180 days or less, or about 6 months. So you can see, know your terminology and know to what type of rentals and when you need to be charging this tax, how long of stays. Make sure you're keeping up with that so you understand how to charge this tax and to which rentals. This next section is probably one of my favorite sections of our presentation today. We're going to take a look at the impact of lodging taxes, why they're important, and the purpose. What purpose do they serve to us, to our communities? And there's always a lot of headwinds and people who do not like collecting these taxes. We always have a negative connotation of tax, but first and foremost, the collection of your short-term lodging taxes is required by law. This is written law enacted by your state, your local governments, that obligate a business operator for a short-term rental or a hotel to collect lodging taxes from their guests and remit those tax returns and that payment on a consistent basis. Failure to do so can relate in penalties, interest, receiving notices, or perhaps some other type of consequence. A large point is these are, again, state and local taxes. These are not taxes that you're filing to the big man in the federal government. These taxes are filed to your state and your local jurisdiction. The tax rates where we saw are 10 to 15%. These are substantial tax rates. And so a great example I like to give is Austin, Texas. Lots of short-term rentals in Austin, Texas. And this is an area where they have a high local tax, and this is actually pretty, when you see the amounts that are coming from all the rentals and all of the lodging or the hospitality industry, it's a very significant amount of money that's getting remitted on a monthly and quarterly basis in these areas. And these go and fund different tourism and public amenities straight in your community. So it's a large amount, very significant amount being injected straight into your community. The last point is the more people that pay their tax and remain compliant with their lodging tax obligations creates a more favorable opinion from the state and local jurisdictions in which we're operating. In the industry, there's a lot of headwinds with people who are opposing short-term rentals. Everybody on this call is probably in favor of short-term rentals. And the more people that are, and operators that are compliant in their obligations to remit the taxes that they collect, the more these jurisdictions are in favor to keep short-term rentals allowed and protect those property rights. Let's dive into the way that these marketplaces handle tax. And I see everybody's questions coming in, and this is excellent. Again, we're going to, at the end of today's presentation, I'm going to go through all the questions and answer as many as I can on our time. So keep sending those in. We really appreciate that. We'll get to as many as we can. The first example we're going to look at is a screenshot here of a VRBO account. VRBO now has a couple ways of doing it since they just released their new tax remittance program within, I think, the last 12 months. But this here is an example of an area where you get to control the taxes that VRBO is collecting from your guests. If they're not already doing so, you go to the taxes tab on your VRBO account, and it asks you what tax rate you need to be charging your guests. I think in this example, it says that it is 9.8%, which I believe is the tax rate in Vail, Colorado. So this is an example of you populate your tax rate in there, and once you hit the save button in the bottom right-hand corner, now VRBO will apply that tax rate to all of your guests' reservations, and then they deposit that money into your bank account. So it's your responsibility to make sure that you are putting in an accurate tax rate in there. This is just an example of a VRBO account, but every tool or every marketplace has their own way or a system to help you charge your guests the lodging taxes. Tax remittance programs on VRBO and Airbnb have become extremely common and increasingly more widespread. These tax remittance programs are covering more areas than they ever have before, and now owners are falling into one of three categories. These tax remittance programs will either file all of the required taxes that you're required to collect from your guests. In some cases, they file or they collect and remit some of the required taxes that you're required to remit. And in some cases, these agencies will collect none of the taxes that you're required to remit. It's important to know which one of these situations you fall in. And this is based on your property's location, specifically going to be your property address. If you're in a situation where a listing agency collects some but not all of the required tax returns, simply give us a call. All of our agents at MyLodgeTax are trained to understand what VRBO and Airbnb are remitting, and we even have a solution within our software that can help people distribute the correct amount of taxes to the correct jurisdictions, accounting for what these companies have already been doing. Our service follows these listing agencies very closely. We are partners with both Airbnb and VRBO, so we stay up to date and can advise on what they're doing and how our service can continue to automate these taxes for you. It is important to know that no marketplace has a complete lodging tax management solution. back from our agenda, the 5 steps to maintaining lodging tax compliance, those are what you need to do to ensure you're maintaining compliance. No marketplace has a solution that addresses all 5 of those aspects. And we're going to look at those in just a moment. All right. The first step is to ensure that you are collecting the correct tax rate. You need to follow up with your state Department of Revenue, a local controller or county controller or tax collector. These, again, all 3 levels of jurisdiction can impose a lodging tax for you, and sometimes it may be very difficult to find that information by just contacting your jurisdiction. Sometimes they do know. Also, along with your tax requirements are what's going to be your licensing requirements. Before you can file any taxes, it's important that you understand where you're going to be applying, what tax accounts you actually need to establish to file the tax returns, and what business licenses are required as well in order to operate your short-term rental. Many of these licenses have tax implications, like we said, tax ID numbers that you use to file the tax return, or maybe it's a license certificate that needs to be posted in the property. Any level of government can impose a tax account or a license that you need to obtain in order to legally operate your business, and sometimes these licenses even need to be renewed on an annual or biannual basis. So keep applying at first and making sure that you maintain proper licensure is a major part of the lodging experience. Once you have your tax accounts set up, you'd have to collect the taxes from your guests. As we looked at the VRBO and the Airbnb platform, I guess we just looked at VRBO, each one has a different way for you to collect these taxes from your guests. You must go on all of your online listing platforms, Airbnb, VRBO, HomeAway, Booking.com, TripAdvisor, whatever it may be, a direct booking. You need to ensure that you are positioned to collect taxes from all of your short-term guests. The taxable base in which to collect your tax, again, is any mandatory charge that is a condition of lodging. So these mandatory fees, some examples of what you should be charging your guests and that total taxable base would be rent, a cleaning fee, pet fee, resort fee, pool fee, an additional guest fee, all these type of fees that the customer can opt into and then becomes a part of their reservation that they receive service for. That's part of the taxable base. The only things that you really shouldn't be collecting tax on are truly conditional fees, such as an insurance if they can purchase that, or a refundable damage deposit if we're expecting to return that to the guest. You may have some customers that claim a tax exemption status. It's not uncommon. What we recommend to do if someone claims tax exemption, go ahead, charge them the tax at the time of booking. Ask that customer to then send you information in writing, some certificate proving their tax exemption status. File that away in case it is ever examined or inquired about, and then go ahead and refund that person the tax. Some examples of tax exemption reasons would be a nonprofit organization or a government employee who's staying at your property. Platforms such as Airbnb and HomeAway or the VRBO network, they will be collecting some of the taxes. If they're doing some of the taxes, you should have a mechanism in place to make sure you're collecting the remaining obligation. Each listing agency or online booking platform or customer is going to send you money. That money gets put into your bank account, and now it's your responsibility to actually remit those tax returns. A few things that I want to mention in order to make sure you're remitting these on time is to determine the filing frequency of your tax returns. How often do they need to be due? Is this on a monthly or a quarterly basis? Sometimes it can get as complicated as your state is filed on a quarterly basis. However, your county or your local tax returns may need to be filed on a monthly basis. I call that a mixed filing frequency, where you have to file two separate tax returns at during two different periods of time. A great example of that would be the state of North Carolina. Very common in North Carolina. The state is quarterly. Those local taxes are monthly. Make sure you understand your due date. Jurisdictions have different due dates. Jurisdictions within the same state may have different due dates. So it's typically the 20th of the month following that collection period. For example, all the revenue that you receive in July, that's going to be due on your July tax return, due August 20th. But there are other due dates, can be the 15th, maybe even the 10th, 25th, or the last day of the month. So understand how often they're due and exactly what day are these tax returns due. Failure to file a timely tax return or file at all may result in penalties and interest accruing for non-compliance. I mentioned this part earlier, and this is something that I go over customers all the time, is once you have these tax accounts set up, you have to file a tax return. They're expecting a timely return from you every single period, regardless of the income amount collected. So even if the revenue was zero and you fail to file a return, there still can be penalties, even though it was supposed to be a $0 return. And ouch, that hurts. The last step to maintaining your lodging tax compliance is to respond to any notices or delinquencies that you will receive from a jurisdiction. It is really not uncommon when you apply for these tax accounts and these business licenses, and then you start filing tax returns every single period, to receive some type of correspondence from your state or local agency. The first thing you do is not freak out. Take a deep breath. Understand who is sending you this notice. Is it coming from your state or your local tax collector? And then understand what are they inquiring about? Return the call, respond to the notice as promptly as possible, and that way you can figure out what needs to be done, if any action needs to be taken at that time. It could be informing you of a license renewal, a mistake on a previous tax return, or a missing tax return to your account. So sometimes you just need to contact them. Sometimes you'll file the tax return and the state or the jurisdiction, they won't process that tax return and they may follow up. So it's important to keep records of these things, follow up, and make sure all your tax returns get processed if you receive some type of notice like this. All right, we are working our way through here. I hope everybody is bearing with us. This last part, we're going to take a look at the actual MyLodgeTax product. Dive in and see what the system actually looks like as you create an account and sign up, and how it looks when you want to report your revenue and what we expect all of our customers to do. The first step of creating a MyLodgeTax account is to enter your basic contact info. This here allows you to create your account. Whose account are you creating? And then you go ahead and you'll process the initial setup fees. We charge a $50 one-time setup fee and then a $20 monthly subscription fee. Now, our service covers all 5 steps of that compliance experience. The $50 setup fee to establish the necessary tax accounts and business licenses, and then that $20 monthly subscription fee covers your compliance and the actual filing every month or quarter. If you have any questions, you can contact us directly. Our email address and our phone number is going to be populated. It's right here. but I'm going to populate it at the end of this presentation as we go and answer some questions. So you'll be able to reach out to us, give us a call, shoot us an email. We want to talk to you. Once you create your account, you'll be brought in and asked to complete what we call your subscription. You can add multiple properties to your MyLodgeTax account. In fact, we work with many operators, people with one rental property, as well as people with multiple rental properties, owners, property managers. Everybody, our service is able to support that. So you create your account. We ask you for that rental property address. This is the address in which guests actually will be sleeping, where we can apply the tax rate and inform you what you need to be collecting from your guests. The second step is a big one that we get a lot of questions about, and that's the limited power of attorney document. Now, this is a very limited power of attorney, which includes the scope of only applying for the necessary tax accounts, filing the tax returns that are required for your rental property, and perhaps interacting with a tax jurisdiction to make sure that your tax accounts are up to date. MyLodgeTax does not assume any other authorization except interacting and filing the tax returns for your short-term rental property. One thing that we require is that the banking information or your routing and account number be linked to your MyLodgeTax account. This information gets encrypted into our system, and we mandate that all payments, both taxes and fees, are made via ACH debit. Now, this usually is pretty easy. People with Evolve or VRBO, you set up a bank account or you have some type of operating account where you manage your rental property from. This is where the funds as well as the taxes will be put into your account, and this is where MyLodgeTax will debit the funds out of your account so we can forward them onto the appropriate jurisdictions. The rental property ownership page and the taxpayer information is going to be required as well. This is a page that helps us identify how you want your tax returns to be filed, and typically is consistent with how the property is owned or deeded. If you want your tax returns filed in the name of a business, such as an LLC or other type of corporation, you're able to enter that corporate information as well as your federal tax ID. We ask for all of that information. If the property is just owned personally by an individual or multiple individuals, we're able to obtain tax accounts and business licenses just using the names and social security numbers of those owners. So the taxpayer information page, all four of these steps are required in order to complete your setup of your MyLodgeTax account. It typically takes about 10 minutes to complete this process. Once we set up your tax accounts and your account has been activated, we ask that every customer log in on a monthly or quarterly basis to report the total revenue amount that they received from their guests. This is your one-stop portal, so you don't have to log into various state and local confusing websites. You get a reminder email every period from our service asking you to log into your MyLodgeTax account, report the number of nights and the total revenue amount collected. Our system will calculate the tax amount due, show you how much we're going to charge, and once you click submit, our system will initiate that bank debit for the tax amount due, sends us that payment and your report so we can file those tax returns and distribute the funds accordingly. I don't know how that got there. All right. The next step is every time you report a revenue amount to MyLodgeTax, that is going to be populated and saved in your tax history page. This is a great location at the end of the year for you to show to your accountant. That way they understand the total revenue that was collected from your renters and how much tax you've been paying. You can filter your tax history page by property, by date, and so really some good tools to help you organize and review and reconcile your past payments and the revenue history that you've been reporting. People print this out, give it to their accountant, and then he can take it from there. Everybody on today's call is going to receive a free copy of the Vacation Rental Guidebook. If you want to access the guidebook, you can do so by clicking the resources button at the bottom of your screen today. So you can receive that just by clicking right there. I want to thank everybody for being on this call and joining me today. It's my pleasure to inform you and give this presentation, as we want to make sure that people understand the implications of renting a vacation rental property and what they have to do. Our service is a great way to maintain compliance and ensure that you're following up with all of those steps. Have that professional representation to do so for you. So as I answer the questions, now I see them coming in, I'm going to leave up this slide here. This is our local phone number and the email. If anybody has any questions, feel free to call that number right now. All right, the first question. I am confused. If Airbnb or VRBO is collecting taxes, do I still have to report to you? Excellent question. Maybe. And yes. So, Airbnb and VRBO both have different tax remittance programs that apply to different areas in different ways. If you're in an area where they file some but not all of the taxes, then the answer is a flat yes. You need to report all of your revenue to us. What this would look like on your account is you would have strictly two lines. So referring back to my report revenue page, actually I'm going to bring it up here so we can see this. This reporting revenue page, you see there's just one line to enter your information. Well, that one line is for just any general revenue. Assume that no one is automatically filing taxes. Now, we do have a complete different configuration. If you are in an area where they file some of the taxes, you would have a second line underneath that where you can report any Airbnb or VRBO revenue. So we only charge the local amount of taxes. And then if you have any revenue from other sources, you would report that on this page as well. So we ask you to break those out. That way our system can charge you the correct amount of tax, so you're not double paying a tax agency, and we can forward those payments to the appropriate jurisdiction. Another great question. We have not been collecting taxes before, but we've been renting our property. Do you have services to catch us up? Absolutely we do. MyLodgeTax, as I mentioned, our fees, that $50 setup fee and that $20 monthly subscription fee, that is assuming just maintaining compliance. So today, or actually if you signed up in July, it would mean August forward. So if you have revenue collected prior to your start date with MyLodgeTax, we do have back tax filing services where we can go and retroactively file, apply those payments to the previous periods, and catch you up. We do every back tax case that we work on, we do ask for a waiver of penalties. Now, we can't guarantee that all your penalties are going to get waived, but we will apply and we will calculate any applicable penalties. If you prefer, you can always just lump in your revenue from these prior periods and put it on a compliant tax return. Although that is technically not the correct way to handle it, depending on how long you've been renting, the tax jurisdictions are usually just happy to get their money. Great question. if filing the taxes under personal name and social security number, does it need to be under the person whose name is on the deed? That's a great question, and generally I would say yes. In most states, I know Florida is extremely strict on that particular policy. Yes, you do need to be filing under the name of the person who's on the deed. There are some locations, and we can be slick about it, but sometimes, you know, some smaller markets or other states, they will apply a tax ID for an individual who is not on the deed. So generally and overwhelmingly, that answer is yes, they do need to be on the deed if you're going to do it in an individual's name, but there are some areas where we could work around that. Another great question. Wow, these might be some of the best questions I've received doing this presentation. Does the $50 setup and or the $20 monthly subscription fee apply separately or for my entire account? All of our prices are per property. We charge the $50 one-time licensing setup fee per property. We establish the licenses and the tax accounts for each property. That could also mean each unit. So if you have a property with multiple units, or maybe you manage a property with multiple units, typically you have to report the revenue on a per unit basis, and licenses and tax accounts are applied for that way as well. So our fees are all per property, that $50 setup fee, as well as the $20 monthly subscription fee. If you have more than 6 properties, we do offer a commercial pricing structure. So if you operate or own more than 6 properties or around 6 properties, send us an email and send us where your properties are located, how many properties you have, and what you've sort of been doing or haven't been doing with your lodging taxes at this point, and we'll get you a custom pricing quote that fits your business. These custom pricing quotes are built to people that want to expand their operation and their investment properties. So as you grow, this pricing will fit that as well. Let's do a few more here. We have just a few more minutes. A great question here. Is the tax calculation to file based on money received that month or based on the fees associated to the renter's actual stay period? Example, money's received in June, but renter not staying until July. Great question. There are 2 acceptable methods of reporting. You can either report your revenue on a cash basis, which means you can report the revenue in the period that you physically receive the money, regardless of when the renter stays. The other way of reporting your revenue is what's called an accrual basis. Accrual-based accounting is reporting the revenue in the period that the service was completed. So regardless of when the renter pays, just report the revenue in the period that the guest checks out. Whichever one of these methods you decide to choose, you just have to stick consistent to that, and that allows you to organize your books and remain consistent in your reporting. If you're ever audited, either of those methods will be sufficient to that examination. A little side note, just what we see in the industry, most large hotel operators or large property managers typically report their revenue on an accrual basis. However, smaller operators, we recommend just doing it on a cash basis. Report the money when the revenue is received. Great question. Let's see here. Wow, lots of questions. Here's a great question. If a municipality that one lives in does not approve or condone vacation rentals, should tax even be collected? This is a really sticky situation. A very hard question to ask on answer on this call, but I'm going to go ahead and answer it. I love this question. We're going to always recommend, collect the tax. A lot of these laws, they get enacted and then they get revised. Or you may be in an area that does not properly zone, that says you're not properly zoned, or they won't issue you one type of license, but you have collected taxes and you have engaged in short-term rentals. It's always best to just collect the tax, remit the tax to the government agency, and if you're told to shut down your business, at least you're tax compliant and they cannot come back to you for a missed payment or penalties on filing the taxes. It would be a much worse situation to accept that understand that they're not allowing rentals in your location, disobeying that law, but also disobeying the law that you have to collect taxes. So collect taxes, even if there's a statute that says vacation rentals aren't allowed in that area, because those are separate entities, separate agencies that are enacting those laws and enforcing them. And as long as you are maintaining compliance, these laws may change. And in the future, it may open the door to allow vacation rentals, and you're already set up to do so. All right, let's see. We'll do two more questions. And if your question was not answered today, please, our phone number is right here. Give us a call, shoot us an email, and we would love to get in touch with you and answer your questions. These questions right here are going to be a little general based on the lodging tax industry and the environment that we see. We will be happy to speak to you about your property specifically. Let's do two more. Can we get a copy of your slide presentation? Absolutely. Every attendee on today's call is going to receive a copy of today's slides, as well as a recording of the presentation, included the Q&A section that we're doing now. So be sure to look at your emails. I think those will come out tomorrow, so you'll get a copy of that. All right, last question. Let me pick a good one. All right, I'll answer. When do customers report, and do I have to create a corporation or a separate entity so I can file these taxes? It's not required that you collect it's not required that you establish an LLC or an entity for your rental property. You are able to apply for the necessary tax accounts and file the tax returns using your business and your EIN, or just under the name and social. Honestly, there's no difference in filing using an EIN or a social security number. Your EIN, your LLC, is only there to protect you as limited liability. When do our customers report, and how do we determine a start date? When you sign up for MyLodgeTax in July, everybody that signs up this month with our firm is going to receive an August 1st start date. We assign your start date for the first of the month following your enrollment. An August 1st start date means that we will file your August tax returns as the first compliant period. So the first time that people need to log in and report their revenue for August is by September 10th. As we mentioned those due dates, we require that all of our customers log in between the 1st and the 10th of their month to report the total revenue that they received from their guests. If you sign up in August, you'll then receive an September start date, which means that October is going to be the first time you're reminded to log in and report your September revenue. So the reason why we give that timeline, when you set up in July, we start you as of August 1st, filing in September. It takes some time to establish those tax accounts and those business licenses. Our licensing department gets thousands of applications that we're applying for every single month. It takes about 1 month to obtain the necessary licenses and tax accounts in order to operate. So when you sign up, takes a couple weeks for us to apply for those licenses, gives the tax jurisdiction some time to process those applications, and then ultimately send the certificates and the license and tax account information back to us. We save that information in our database, link it to your account, and we use that information to file. Any certificate or original document that comes with the implication of licensing your property, we will mail that document to you, so you have the original on file. We keep copies of here for our use to file the tax returns. These are your licenses. You can do with them what you want, file them away, post that license in the property if that is required. All right, I want to thank everybody on this webcast for joining us today. I really hope that this was informative to you. Thank you so much for joining. If you have any questions or we didn't get to your questions, please feel free to give us a call, send us an email. My name is Justin. We have my colleague Carissa here and my colleague Rebecca. We'd be happy to answer more of your questions, talk to you on the phone, and help you create an account. Thank you all so very much, and I hope you have a great rest of your day. Take care.